Good evening, everyone. Welcome to our show, Kedia Talks, where we'll talk with the personalities from different backgrounds on personal finance. So today, I'm very excited. Even you can see that my excitement is very high. I'm going very fast. But yeah, today I'm very excited for our second episode, where we get to know about the developed markets. Whenever we talk about the personal finance, whenever we talk about financial planning, so we need to understand that whether it is being on an emerging markets or whether it's being related to developed market. So in today's session, we have a very special personality who has been a 4x awardee from the five best wealth manager from the Baltimore Magazine. Even his clients always remark him for his communication skills to make sure that his the technical or the difficult financial concepts can easy to understandly delivered. So without wasting much time, let's begin with our today's episode and welcome our guest, Mr. Ben Offit from Offit Advisors.
All
So
right.
welcome,
Yeah,
Ms. Ben. How are you?
I'm good. Thank you, Sanjeet. Thanks for having me.
Okay, so Ben, let's begin with our today's session. But I have a little bit questions to ask you. I need to know give me just a little bit brief about your financial planning journey. How and from where did you start it?
Okay. Yeah, so I started out of college. I went to the University of Maryland, which is near Washington D.C., and I majored in entrepreneurship. I knew I wanted to have my own business of some sort, but I didn't know what that would be, and I didn't have a clear picture as to what I was going to do after graduating from college. So I kind of didn't have a plan, to be honest. And then I knew I wanted my own business of some sort, and I got a call from this big financial services company that had found my resume on like the business school database and said, "Hey, you look like an interesting candidate. We'd like to invite you in for an interview." And it was a financial services company. I'd never heard of them before, and so I went in for the interview. I liked what I heard. They told me that I could have my own business, that I could help people through money stuff, and that I could have no limit on my income, things like that. So all of that I think kind of appealed to me, and I just went with it and kind of started my own business inside of this bigger firm out of college, and really just got started from there. I never expected I would end up in this line of work. It just kind of happened, and I've stuck with it.
Oh, that's really amazing. So it's kind of an inspiring as well. So Ben, what are the major challenges that you face while you just beginning your advisory business?
The major challenges I faced today, or when I was starting it out.
When you are starting it out?
Well, I think the challenge for me, along with anyone starting out in this business, if you're going to have your own clientele, is trying to build your clientele. Um, you're starting from scratch. So if you want to have clients, you have to get clients, and that's not easy. So how do you how do you get clients and you've never had them before, and you've got no you know background to stand on really? You have to work really really hard. So I just had to get in front of a lot of people. And what I did is I just got a lot of referrals and introductions on a consistent basis. So I really just focused a lot on what I was doing on a daily basis. And I was essentially trying to just get introduced to, maybe 3 to 5 new people every single day. And then I would call them, and a lot of those people would tell me no and just, say, I don't want to take a meeting with you. But a few of those people would take a meeting with me, and then a few of those people that would take a meeting with me would eventually become a client. And I just tried to be honest and truthful, work hard, and to show them that I would care about them and take good care of them, and just try to help them as much as I could, and consistently just try to get in front of as many people as I could, while also simultaneously just trying to learn as much as I could, because I really entered the business not knowing anything. So I just studied for a long time. I still study today, but especially in the beginning, you're constantly trying to learn more and more things as you're building your clientele. So that's just kind of how it went for me.
Okay, so I'm surely understand these things. But yeah, one more thing, like as you said, there was no client base. You have it. You don't know from where to acquire the clients. So what was the major client reaction when you interact with the clients, or there might be some lot of myths with regards to the financial planning. So how did you tackle them?
How did I tackle the myths with financial planning?
Yeah,
Well, I think you just have to try to be truthful. Whatever someone's preconceived notions are, maybe they think you're just there to take advantage of them, or maybe you're just there to sell them something, or they think that the market's going to go down, or that you're going to steal all their money. Whatever their negative myth is that they're thinking, you have to listen to it, hear them, try to understand where it's coming from, and then I think just try to respond in a truthful way, and then show them that you're not there to steal their money, or that you're not there to put it in something where all the money's going to go down, or something along those lines. Whatever the myth is, you know, just try to help them understand the reality of the situation.
that is true. It's really hard to like. It's always be a better choice to being a truthful and transparent with the clients whoever you are meeting to. And that's again, as an advisor, we need to be always be a transparent and being in a code of conduct with ethics, so that there won't be any kind of a conflict of interest arises. So being as an advisor, like what points do you suggest to the clients before they interact with any advisors? So I'm sure you might be interacting with a lot of clients. So there are a lot of clients who have been asked you the same questions. So what points do we need to take out or put it down as a note?
So, what do the clients need to think about before hiring an advisor?
Yes.
Well, I think the way that I look at it is the clients are hiring like a financial doctor. So the doctor is there to help them and support them and make sure that they're in a financially healthy position now and moving forward. But I think the client first needs to think about, well, is this the kind of relationship that I want? Am I open to having a financial doctor in my life? Someone that will look at my financial health and kind of, tell me what I need to do or guide me in the right direction. Because not all clients are open to that. A lot of clients are do-it-yourselfers, or they don't want to delegate, they don't want to trust other people, or they've just got bad habits that they don't want to change. So I think the first thing that they need to think about is, am I ready for this? Am I open to this? And then if I am, well, then it's about finding the right advisor or the right financial doctor for you. And I think that some of the ways that you can do that is you can ask your friends or your family who they've used and if they've had good experiences or what they think. You can also, seek out advisors that maybe specialize in the area that is most common for you. So, if you have a certain profession, or you have a certain, wealth status, or whatever it is, or a certain place you are in your life, maybe there's advisors that specialize in working with people just like you. But then I also think you want to, interview them, ask them questions about how they operate, how they get paid, what kind of advice they should expect from you. Um, what are their background? How long have they been doing it? What are their credentials? You can do some background checks, um, things along those lines. And just, I think the last thing is just have a gut feeling. Do you feel comfortable with them? Do you think that they're going to lead you in the right direction? Is this the type of person you could really see yourself taking advice from for a long time? And if that feels that way, then it might be a good fit. If not, it might not be.
Okay, that's being kind of being simple and clear cut thing. That being an advisor, we need to be very make sure whether we want to go with a financial doctor or not, or whether we just want to go a DIY or that is to do it yourself. That's true. So Ben, there is a one more thing that when it comes to Indian market, emerging markets when we talk about, so retirement planning in India has more focused on accumulation of retirement funds kind of a thing. So being in a developed market like America, which two distribution strategies do you recommend that have proven up beneficial in managing a retirement funds during the client's retirement years as well?
Well, I think before anybody hits the go button on retirement, you have to make sure that you're in a good position to do so before you stop working, because it's a big change to go from accumulation to distribution. So it's one thing to be working and having an income and saving money, and then it's another thing to stop working and then losing that income and then living off of your assets and drawing from your savings instead of saving more money. It's a big change. So I think before you retire, you have to make sure that you have enough capital um, and enough income streams, in different ways to say, am I going to be able to meet my monthly living expenses now and for the rest of my life? And then are there things I'm not thinking about that maybe could be problematic, or issues on the horizon that I need to think through? But what we typically try to coach people to do is to be more focused on the growth orientation of the market, more focused on equities, because historically those have higher rates of return than bonds or cash do. And we think that even if someone retires when they're 60 or 65 or 70 or whenever it is, they still have a long life to live in front of them. It could be another 20, 30 plus years. So during that time, if you don't want your assets and your money to be eroded by inflation or lose its value, you still want to keep your money in a growth-oriented portfolio. But then what we also counsel them to think through is, well, the markets are still going to go down at some point. It's not a question of if they're going to go down, it's a question of just when. Out of any 10-year cycle, historically, the average is, maybe 8 of those years are up years and 2 of those years are down years. In a 4-year cycle, maybe 3 of those years are up years, 4 of those years are down years. So people need to be prepared for the down markets. And typically what we coach our clients to do is to maybe have 2 years worth of non-market correlated assets, something like, cash or bonds, or, cash values and insurance, or it could be annuities or CDs, or it could be home values, anything that's not going to go down with the market. So then when the market does go down, you can say, well, I've prepared for this. I can draw from my safer money instead of my equities, and leave my equities invested, let them come back, and then take from my safe money when the market is down. So those are some of the things that we focus on with our clients, and we think it's a strategy that works.
That's true. So, as you said, being an investment, we have to be make sure that we are being hedged against the inflation and somewhere around the crisis as well. So, most of the time when we talk about the investments, the first foremost thing question comes out the tax saving investments. Just for the sake of the purpose, we generally do investments just to save taxes. So, can you provide one or two instances from your experience where tax optimized has played a key role or better role in the long run than other kind of arbitrary investments?
Yeah, well, I think there's a couple things to that. So I think you certainly want to be as tax conscious as possible. I can't speak to all the tax laws in India, but in the U.S., there's different places you can invest money that give you tax advantages when you save money there. So not only are you getting the benefit of growing your money in the markets, but you're also getting tax benefits associated with that. So that's like a double compounding positive effort. So if you can have investments that have growth in the future that is not taxed, or if you can get a tax deduction for making contributions today, those are great things. If you can put money in buckets that the money grows tax deferred, meaning that as it's growing, there's no taxes that are associated with it, that's also a great thing. That being said, also on non-retirement accounts, though, sometimes what I see people do is they try to get in tax-oriented securities that might have less taxability to them, but those actually can sometimes have lesser return. So you kind of need to weigh those pros and the cons. Do I want to invest in something that maybe has higher returns and a little bit more taxability, or do I want to invest in something that maybe has lower returns and more tax sensitivity? So you think, well, which one am I actually going to make more money from? And oftentimes what I see is actually clients would actually make more money from something that is more taxable but has higher returns. The net after the taxes is higher than something else that's tax-free, maybe with a lower return, if that makes sense.
Okay, so I may presume this thing that being a misery going with the tax saving option, it's better to go for the options where you're getting maximum return, whether it's not just concerning a tax as a saving purpose before making any kind of investments.
Yeah, I mean, I think I think at the end of the day, what everybody's trying to figure out financial planning or investing is, ultimately what's gonna give me the most amount of money long term, and what's gonna give me the most peace of mind and confidence in my plan, and how am I not gonna run out of money? And everyone's trying to think through the best way to do that. So, if you can get tax savings opportunities but not sacrifice return, and you have enough liquid to do that at the same time, you have to balance all these things out. And that's a lot of what we do is we try to figure out, what are your resources, what are your assets, and how do we make the best use of them? Because everybody has finite resources, and everyone's trying to figure out, well, with the resources and the income and what I have, how do I how do I divide this up? How do I make the best use of this that I possibly can? And there's a lot of things to consider with that. A lot of goals, a lot of objectives, you know, and that's part of what our job is as financial planners, is to help people figure that out.
That's true, Ben. Ben, one more thing, like as we can see, like it's right now we are also going to the crisis called pandemic or COVID-19 crisis we are currently going through. So there is like last year also there might be a lot of changes in the client's portfolio as well. So what is the one major change in your financial planning advice to the client in these times of the pandemic as well?
That's a good question. Um, I think that for the most part, clients, well, people's lifestyles might have changed during this time frame. Um, it was pretty scary, right at the beginning of the pandemic when the markets went way down. But what we tried to coach our clients to do was to, stay invested, not panic, put more in the market now if you can. And the clients that stuck to that and didn't panic did great, because the market came back roaring and went even further. So people have done pretty well, investment wise. Um, I think what you've seen as well is a lot of bond yields have come down, interest rates have come down. So people aren't getting as much return from those segments of their portfolio anymore. So we've talked about clients, um, shifting more into equities if they're comfortable with doing that. But also at the same time, with a lot of people that do have debt, they've had the opportunity to try and take advantage of those lower rates. So if they've got loans or liabilities, they could refinance and get lower rates and free up cash flow. Um, but ultimately, what we try to counsel our clients to do is, have enough in liquid cash to fund your emergencies and your opportunities, and then the rest of that, beyond that number, try to keep it growth oriented and keep it growing, because you're really not getting much yield in cash or bonds, and so you're really kind of losing money in those assets versus you could be gaining money in more equity oriented investments. And then we also, there's been a lot of money, kind of flooding the system. We've tried to counsel clients, not to be too focused on the fads of the moment. There's been a lot of talk about investment fads like, cryptocurrency and NFTs and um, SPACs. And while there could be some role for those things in your portfolio, they shouldn't be the main focus of your portfolio. We still believe that people would be rewarded for being long-term patient investors and having a broadly diversified portfolio, instead of focusing more on speculative investments.
Okay, so you also said the cryptocurrencies and the liquid fund, but Ben, we have seen that pandemic has not gone yet, and there is a second wave also coming right now, and the market is right at the peak, going at every day, it's making a new record high. So, being that cryptocurrency part, though cryptocurrency is legal in America but not in India as well. So, what's your view on that part? Like, people are going and considering this cryptocurrency as their financial asset as well. So, being a financial planner, do you also suggest these things?
For the most part, I don't. Like I was saying, that I think the market, while it might be at an all-time high, my belief is that it's, always at an all-time high. If you think about where the market might be 2 years from now, or 3 years from now, or 4 years from now, most likely it's going to be higher than where it is today. If you look at where it was 4 years ago, it was lower than where it is now. So I don't think the notion that the market is really high is a reason to think that it won't be higher in the future. And that's the essence of the market, is that it always goes up higher than where it's been in the past. So I think people need to maintain that faith and optimism that that will continue to happen, because that's what history has shown us will continue to happen. In terms of cryptocurrency, or Bitcoin, or whatever someone's interested in, I think if one of those emerges as really the main long-term currency, and maybe it will over time, it could be a good investment. But the challenge is that we don't really know if it's going to be Bitcoin or Ethereum or whatever it's going to be as the main cryptocurrency of the future. So I think what's going to happen is most people that invest in those things, the chances are is that is not going to be the winner as to being the long-term cryptocurrency, and therefore their investment's going to go to zero, which is pretty speculative and risky. So what we talk about clients to is, instead of trying to focus on investing directly in that type of cryptocurrency, if you invest in a broadly diversified portfolio, your portfolio is going to be invested in that ultimately anyway. Because if you're investing like the S&P 500 or a globally diversified portfolio or whatever it is, you've got companies in there that also are starting to use cryptocurrency. So, for example, like Tesla, is using cryptocurrency. So if you've got an S&P 500 fund that has Tesla in it, by way of default, you're investing in cryptocurrency without investing directly in it. So you can be, invested in it by investing in the greatest companies on the planet without having to be so concentrated of your own portfolio in it, if that makes sense.
That's true. So when we talk about these cryptocurrencies and the markets you called iron investment, so there are always being a tips provider who are being giving a free tips kind of a thing. Though in America, like I can understand developed markets as well, it's being kind of regulated. But in India, investment advisory is now getting being regulated. So what is your opinion on advisors and the financial planner obtaining for a professional indemnity as a protection from industry? So kind of an unfair trade practices. Do you have any kind of an opinion about this thing?
Yeah, I mean, I think there has to be a balance. There has to be some regulation, because there's some bad actors, bad apples, out there. And if there's no regulation, then people will take advantage of that, and you can really harm people financially if you're taking advantage of them, and people can lose money, and that creates distrust in the system as a whole and financial planners as a whole. So we need to make sure that there's enough regulation that people are acting honestly and ethically, and not screwing people over. But at the same time, if there's too much regulation or too many rules, it can be a difficult environment to deal with as a practitioner. So it's kind of that balance you have to figure out, and but ultimately it's for the benefit of everyone to have that balance, I think.
That's true. There should be a balance between. Even I have a very good quote which I have read it from Mr. Warren Buffett, who also said that Wall Street is the only place that where the people coming from luxurious cars taking advice, who is like taking a subway. Is that kind of a thing even happens?
Right. Yeah.
Okay, that's good. Okay, so one more last question I do have it. Like, you might have come across people who have migrated from one country to another, like while giving a financial advice to them. So even they have taken a citizenship in American as well. So they are being a dual citizenship. So as an advisor, financial planner, how did you manage or advise them? Let's say from India to US as well, or from any other citizen.
Yeah. Um, it's challenging. I think I feel for people that have migrated from one country to another. That's a big change in so many different ways. You're leaving what you're used to. You're leaving your friends, your family, the customs, the cultural aspects, that you're used to, the tax laws, the financial laws, assets that you're used to a whole new world. So that's a lot to adjust to. Um, and then you might still have family and friends and assets in your home country and then the new country. So you're trying to balance both of those things. You're trying to learn the new tax laws, the new financial regulations, how things work, new jobs, new languages. So it's challenging for those people, and I feel for them. So what we try to do with clients that have that situation is we just try to be extra patient and communicate clearly and just try to help them understand how we can help them here in the US with their situation as best as we can, and help them adapt and understand what's the best fit for them financially here.
Okay, that's true. So another thing, like for example, if a person has been migrated to, let's say, India as well, so there is an Indian advisor as well, and you being in America, so that a person who's an American citizen as well, so he might also come across to you and ask you the same question, no? That do you know any Indian advisor or any financial planner? So do you give them any service or collaborate with any advisor or do this directly? So that again, I'm being
Yeah, I mean, I think someone like you could probably do a great job, with clients in India. We don't know that landscape like you do, So if clients have assets there or questions there, someone like you that's a certified financial planner that's living there and knows those laws and regulations the way that we do here in the U.S. Um, I think that would be a big benefit to them.
Okay, so that's a good thing. So, being an advisor, we also can go for a collaboration with other advisors from the apart from across countries as well to build up businesses as well because they are being a non-resident from our native countries as well.
Correct.
That's true. That's a good part. So, Ben, do you have anything to like being like any a short tagline or an advice you can give is to being all the advisors right now, like there are might be advisors who might going to listen this video as well, so there is any thing you want to share with an advisors as well.
Like a short piece of advice for advisors that are watching.
Mm-hmm.
Um, I would just say, work really hard and be passionate about trying to help other people. And I think if you work really hard and you want to help other people and you always are trying to get better, I think that's a good combination. I think that will lead to success. But along the way, to be successful, you're going to face a lot of obstacles. You're going to face rejection and fear and doubts and hard work, and late nights and early mornings, and you just have to push through all of that. And if you believe in what you're doing, you know, keep going. It'll be worth it.
That's true. That's true. Okay, so we have to being very passionate and focused on whatever the challenges that come up. Because after every obstacle, there is a kind of a sweet fruit that is waiting for us as well. That's a kind of a hope we can keep on expecting it. So, but I have done with my questions part. Let's see. There are some questions that have come up from the audience's part. So, if there is any question, I'll just read out and please answer those questions. I hope I am not being late. We have a very less time left without. But yeah, let's ask some questions and let's see. If there are some questions from the user side.
Okay.
So, audiences, if you have any questions to ask from the band, you can directly write it in your comment box and like we can read out and Mr. Ben is there to answer your questions.
Seen any coming through?
Uh-huh. Yes, I just got one question over the Instagram as well. Like we are being live on here. So one person is asking me this question, like, Ben, you have started early, like how was your journey about your five-star best wealth manager?
How's my journey about that?
Yes.
Yeah, I mean, you know, here locally, it's just an opportunity to, you know, submit, get nominated. You can either submit yourself or you can get nominated by someone else for that award. And then what they do is they review criteria about your background and your experience and, your client satisfaction and your retention rates. And they determine if you're eligible to get it. So, that's pretty much it. It's just, we're thankful we've been able to get it the past few years, and hopefully we can keep getting it for a long time.
Okay, that's true. So then, also one more question I got it from Sheetal as well. She's asking me this question that there are a lot of advisors who is going for a commission, and there are some advisors who is being taking a fees. So in developed markets, how do you identify them? How can an individual can easily identify them?
Yeah, you're right. I mean, I think the industry has continued to change and evolve over time. And at least in the US, I think when this industry started, 40, 50 years ago, it was all commission. And now it's very heavily more favored into more fee based. Um, I think, that's just the way that things have gone from a regulatory environment here as well as a client preference environment here. But I think what we're seeing is a lot of clients prefer the notion that on a fee basis, you're held to a higher standard of compliance and regulation where you have to be a fiduciary versus on a commission basis, you don't necessarily have to be. On a commission basis, you technically have to be suitable at the time of the transaction. But then after the transaction is done and you've been paid, you don't necessarily have to care as much. So, an ongoing fee-based relationship, you're kind of being paid and you're also being, signing up for a more fiduciary oriented responsibility where you have to have more ongoing care and obligation to the clients. I think a lot of clients prefer that. A lot of clients also like the notion that you don't get this big payday up front, or it doesn't have this big deduction out of the client's account. And then they might not hear from you as much moving forward, or that it might have been the wrong advice and they can't really change that because they paid so much in commission up front. So with the fee-based approach, it's more spread out over time. And if someone wants to get in or out, they can stop at any time. So it's more of a easily changeable thing if they want to. But that being said, there's some products, there's some reasons to go the commission route sometimes, and that can be a better fit. So, for us, we think that there can be benefits to having both avenues open. But for the most part, we do more fee-based planning. But sometimes it does make sense for various circumstances or reasons to do the commission-based approach. And we'll explain that to clients as to why that is for that reason.
Okay. So I hope Sheetal, you got your answer part. Let me check another question has come out or not. Okay. Mhm. Okay. So then one more question I got it from Mr. Yash as well. He's asking, what are the challenges for the clients to go for it? Like whenever they are being interacting with an advisor, any, so they always being in a doubt whether to trust them or whether to not to trust them. So how do you tackle these things? Like, what's the best strategy you being or like what they need to consider? So that's an advisor part of a question.
Yeah, I mean, we try to understand what their concerns are, try to understand where that fear or that doubt comes from. Have they had a bad experience with another advisor? And if so, what happened? Has their family or friends been telling them about ways that they got screwed from different advisors or they had a bad experience? So we can understand that. So we can try to pinpoint what happened and where that fear is coming from. And then we can try to communicate to them how we're different or how we don't do things that way. The other thing that we encourage clients to understand is, we have a certified financial planner designation, which is also, a credibility marker because you have to have, very high experience and background checks and knowledge to have that designation. We also encourage clients to explore a background, which is publicly available, so they can look at that and see if there's any red flags. We also have things like that, wealth management awards. We operate on a fiduciary basis, and so we can explain what that means, that we have to operate in clients' best interest. if they really, want to understand further, even more, they can talk to some of our existing clients about their experience. But I think what they'll see over time is that we're, legitimate operation. We will have our clients' best interests at heart, and we want to serve them, and that's why we're still in business. So we wouldn't be in business if we didn't think that way or operate that way, and we really have nothing to hide.
That's true, Ben. With this answer, I have a one very good question. I have a question in my mind as well. Like being an advisor, like we already met a lot of clients, like somewhere around like 50 or 100. So as a particular solo advisor can manage around like 50 to 200 clients. After that reach is out, so how does a particular advisor manage the new client base? Whether they are just being satisfied with the particular client base of 200 or 300, or they must be like go to enhancing, how they can expand their businesses as well.
Yeah. Well, I think there's two paths you can go down. I think if you say, well, I've only got room for 100 clients or 150 clients or whatever, you set that limit and you say that's all that I can serve. So, until I reach that 150 client mark, I can keep taking on more clients. But then if I reach that 150 mark and then new clients want to join, me, I say, well, I can't take you. I already have 150 clients, or if I do take them, well, maybe I have to let another client go. Or then, what I could also say is, well, I'm going to raise my prices or my fees, and then I'm only going to keep clients that can pay this higher fee. Or, if you don't want to do that, you can start to expand your infrastructure. And that's what we're doing and trying to do is you say, well, instead of working with me directly, you can work with someone on my team um, who does things the same way I do, but it's another advisor. We would do things as a team. We've got more capacity to serve more than 150 clients because we've got other advisors that can serve you besides just one person.
Okay, so it's always been a good idea to go for being appoint another advisor or a kind of a paraplanners or some kind of a junior advisors for these things, right?
Yeah, I mean, and that's the beauty of our industry is that you can choose what kind of model makes the most sense for you, and what you want to do, how you want to serve clients, and you know you can decide how you want to run your business.
That is true. That is, it is always up to us how we have to manage the things, how we have to deal with our challenges as well, whether it's respect to the developing the business or expanding the businesses as well.
Right.
That's a good part of it. Okay. So it looks like I am done with my questions part. Audiences, I have not received very much questions part. Looks like these things are very new to them as well. But yes, we I'm sure a lot of things comes up because we being have been collaborating all these things by giving the advices to American citizens as well, to NRIs as well who are being planning to being settling out America as well or being migrating back to India as well. So I'm sure you being always being a help to them as well, right?
That's right.
That's great. Also, Ben, one more thing. I have read one of your article as well. You've been doing a kind of a volunteering work to the retirement people who have been retired as well.
I'm sorry. You read an article about what?
The article about you being a volunteering, being a contribution to the retired people who doesn't afford go for the financial planning, kind of a pro bono kind of a work.
Yeah.
What actually is it like? It's in India. Pro bono is kind of a new thing, so I need to understand what actually is it.
What is pro bono?
Yes.
Just basically doing it for free. So I'm pretty involved with our financial planning association here in Maryland, and different local programs that we have, and there's a lot of people that want financial planning that think that they don't qualify for a financial planner or that feel embarrassed about going to see a financial planner or just have different life circumstances. So I think really, what we just try to do is give back and find ways that we can do pro bono planning and offer opportunities for people to get high quality advice for free that might not always get it. And that's important.
I'm sure that's really a good thing as well. So whatever knowledge we have acquired, it's better to share it. So every time it's not just about the money as well, it's about the quality of advice as well.
That's right. I agree.
That is true. So that's all from my side, back. I think I'm already done with all my questions for the basket as well. But yeah, do you have any other question, anything to ask from us as well from Indian side?
No, I appreciate it, Sanjeet. It's been great getting to know you and working with you, and I appreciate the opportunity to be on your show here today, and look forward to continuing to work with you in the future.
Thank you so much, Ben, for giving us your so precious time. I'm sure, there are a lot of people who are looking for advisory in American or wants to invest in American markets. They surely can contact you over there as well. Or if they need any kind of an advice from Indian as well, or being from both sides, we are always there to help them out as well. Thank you, Ben, so much for being here.
All right. Thank you, Sanjeet.
Have a great day, Ben.
All right. You too. See ya.
Goodbye. So that's all from my side for the guys. If you like this video, you can share it, comment it, or being ask your questions in the chat box, or being directly message to us so that we can reach you out and answers all your doubt with respects to your financial planning or your personal finance. So see you in the next week with some of the very good advisor or some personalities been coming out. So see you and have a great day. Goodbye.